Hello again. Welcome to another episode of the Uranium Market Minute. Today is Friday, January 14th, and this is episode number 63. My name is Justin Hune. I am your host. I'm the founder and publisher of the Uranium Insider Pro newsletter, the only investing newsletter that focuses solely on uranium and publishes on a regular monthly basis. Thank you to everyone who joined us in yesterday's members webinar. It was another really great session. We had an awesome presentation from our special guest, and we got to really go deep into the weeds in the sector and give my detailed outlook for the next 6 months in the sector, which I believe will be very beneficial, especially for those who are just arriving to the sector. For those already fully positioned, it's obviously much easier to just sit back, ignore the daily noise, and hang on for a few years. Easier said than done, right? Well, before we get into the video, of course, nothing in this video is intended to be investing advice. I'm not your financial advisor. This is not financial advice. Please always do your own due diligence when it comes to investing, and always take responsibility for your own choices. Another note on the webinar, all of our content that we publish is archived on the website. So if you join as a new member, you can access all of our previous content, all of the monthly newsletters, email bulletins, the recordings of the members' webinars, etc. Another crazy day in uranium today. Really tested some nerves, that's for sure. Had a nasty down day yesterday. Today looked like a repeat, and then we had some brave souls come in near the close and pop most stocks back up near breaking even on the day. Good to see some dip buying come in at the end of the day, the end of the week, and save what was looking like some pretty nasty weekly charts. Either way, here we are. So let's go ahead and jump right into the daily scoreboard. Spot price of uranium, again, flat, 45.75 a pound mid-market, but does look like there's some trading action going on a little bit in the spot market. I think that there's some traders accumulating some uranium at present prices. If there is a relatively liquid seller in the market currently, that could be BHP, that could be Itochu, that could be Uzbekistan, could potentially be some carried pounds coming in, although the market is not very severely backwardated, so that's highly unlikely that's coming through in major volume at the moment. Either way, I think that there's some traders potentially front running the expectation of Sprott Physical Uranium Trust returning to a premium to NAV and taking the price of spot uranium back up to to another leg potentially higher than the previous high of about $51 a pound back in September. We will see. Either way, the price is remaining flat for now. And yesterday, I'll do over the past 2 days, since we didn't do a market minute yesterday because of the members webinar. Over the last 2 days, Sput raised 11.1 million new capital. They purchased another 450,000 pounds. They've now purchased 2.6 million pounds this year to date. This is 2 weeks into the new year, folks, and 2.6 million pounds. That is over 60 million pounds in a single year. And as I've mentioned in previous episodes, we have modeled out for far, far less than that. And I think that our modeling is very, very conservative. So if you happen to be in the webinar yesterday, you can see that this is exactly what we're talking about, this accumulation of pounds. And it's seemingly happening very fast. It's happening faster than we would have expected. But either way, 2.6 million pounds in 2 weeks is absolutely insane. And Sprott just continues to go through the above ground mobile inventory, just chewing through it, which is fantastic. They closed at a slight premium to NAV yesterday at 0.41%. They were up slightly on the day with the spot price flat. So they are right around that 1% premium to NAV. If we can have some green in Monday's trading, perhaps we will actually see some more money raised, but their treasury is down to 26 million in cash. That basically means that they're going to need to raise more money to buy more uranium. I don't think they're going to be drawing this down very much at all, if at all. So they likely will sit with this amount of cash until they can raise more money on the ATM back above that 1% premium to NAV and come in for more pounds in the market. To recap, since their ATM went live last year, August 17th, they've acquired now 25.6 million pounds of uranium. And they've raised over 1.1 billion in new capital. Again, they have access to 3.5 billion on this existing ATM. Turning to the sector equity ETFs, these are again 2-day numbers. URA reported an increase of 340,000 shares outstanding. URNM reported an increase of 125,000 shares outstanding. That's over the past 2 days. So now these two ETFs, their outstanding shares are near all-time highs. So what does that mean? That means the selling pressure in the sector is not coming from ETF outflows. So what is the takeaway there? The takeaway there is, in my opinion, of course, this is mostly retail driven. There's a decent amount of money that came in last week. You could see the record volumes in the Sprott Physical Uranium Trust, near record volumes in the ETFs, and a lot of hot money came in wanting to trade around the Kazakhstan news. That news dissipated almost as fast as it arrived, and a lot of that hot money is bailing in the sector. It also seems like there's a potential of maybe some smaller institutions that are trying to reduce overall weightings in overall long positions. That could potentially be what's happening as well. Sometimes what happens is some of these smaller institutions will be trading on margin. If they have some of their longs potentially in the tech sector that's been getting smacked pretty hard, if some of those longs are being traded on margin, they get margin calls, they have to sell down essentially everything else that they have, at least some percentage of it, to make room to pay for those losses. That could be happening. We are seeing a little bit more weakness the past couple of days in the sector. However, if we zoom out, things look relatively positive still, hanging on by a thread. So on that note, let's go ahead and take a look at the charts. Starting off with URA, again, this had us a little bit nervous throughout the day. Decent volumes, and we were trading well below the 200-day moving average. And then at the end of the day, the last hour had a nice rally, closed back above that rising 200-day. Again, we had this false breakdown, this undercut low a couple of weeks ago. This was during that URNM and URA selling that hit the sector due to the dividends and the tax rebalance. Now we're having much more, in my opinion, what is retail-driven selling after this peak volume day last week on the Kazakhstan news. I was looking at the weekly charts today, so I'm gonna take a look at that and share that with you as well. Really, URA on the weekly chart, zooming out, is consolidating pretty nicely horizontally here, holding up relatively well above this 50-week moving average. And you can even see the 200-week moving average is now moving up, has been for about half a year now. That is really a truly long-term bullish signal, is the movement and the direction of such a long-term moving average, which has essentially been moving down since URA's inception, and finally is turning up. So that's really interesting to see. So yeah, weekly charts, when we look at that, we can see that we are holding up here. Of course, it would not be a positive sign to see the sector break down further. I'm not going to be unabashedly bullish when I'm looking at these charts. As I mentioned today, I was a bit nervous intraday. I am encouraged to see buyers come in, especially at the end of the week. Typically when market players are nervous, when they go into the weekend, they try to reduce long exposure, not increase it at the end of the day and the end of the week. So that was a very interesting thing to see. Sput also up barely on the day, 0.61%, considering they were at a 0.4% premium to NAV. They're just right around that 1% premium to NAV. And I think if we have a flat spot price tomorrow and some green on the screen for the Sprott Physical Uranium Trust, they will be back above that necessary 1% premium to NAV to issue shares. This thing is looking extremely coiled, very bullish chart relative to the rest of the sector. Let's look at a couple of large caps in addition here. Cameco also down almost 2% on the day, but we did see some buying come in at the end of the day. That's a good sign. They're likely, based on today's action, could have been some ETF outflows, which we will know tomorrow and then, Monday or Tuesday. And that likely had something to do with the selling, but for the most part, the selling that we have seen over the past, almost 2 months has been mostly not coming from the ETFs. Interesting. Let's look at NextGen and Denison as well, a couple of other prominent large caps in the space. Down 65 handles today, nothing terrible. Again, nice printed hammer there. Volumes, just about average, hanging in there. Denison hovering right there at the 200-day, traded down below it today, probably had a lot of people nervous. Dip buyers came in at the end of the day and closed almost precisely on that 200-day moving average. So we are right on the precipice here, and I think the next coming weeks will tell a lot of, technically how the sector will hold up here. Of course, I would like to see it hold that 200-day. If we see large volume selling breaking down below the 200-day, that obviously would not be a good sign. But again, we have had, decent selling coming down through the 200-day before in the sector. during this bull market, only to have it reverse relatively quickly. Could we see a repeat of that? Only time will tell. Looking at the mailbag today, had a question come in from Sports Nut Jim. Jim says, does Yellowcake PLC do the same thing as Sput? So Yellowcake PLC is a physical uranium fund. They were established in 2018. They have accumulated over 18 million pounds already in those few years. So they have really been accumulating a lot of uranium in a short period of time. But the way that Yellowcake functions is a little bit different. So the Sprott Physical Uranium Trust now is accumulating uranium by issuing shares into the open market via this ATM financing vehicle. So when they're at a premium to NAV greater than 1%, up to 50 to 60% of the daily trading volume, they are willing to have their sales via the ATM take up as much as 50 to 60% of the daily trading volume when they're at greater than a 1% premium to NAV. So when the volumes are really heavy on a daily basis into Sput and they're greater than a 1% premium, they can issue shares like mad into the open market. They will also do off-market block trades, but the majority of their finances that they raise to buy uranium comes from the ATM, and therefore they can purchase physical uranium on a relatively consistent basis. That's the big difference between the Sprott Physical Uranium Trust. Yellowcake has an annual option to buy $100 million of uranium from Kazatomprom, and they have the option to issue shares to raise that capital to do so every year from Kazatomprom. They have done that the past few years. They are already looking to do that again and take this year's option in January. That's a really good sign for the sector, of course, that Yellowcake is acting so quickly. In fact, typically they will have an annual general meeting, an AGM, where they will get approval to go ahead and execute that option, and they're already seeking to execute that option prior to the AGM. So they're anxious to get in there and buy some pounds. Wonder why? I think they see the writing on the wall, especially with the NYSE listing for Sput happening later this year. So essentially, they function similarly in that they exist to accumulate pounds of physical uranium. They are a vehicle for investors to have exposure to the physical commodity in London. They're on the London Stock Exchange. But the way that they raise money and their ability to consistently purchase uranium is pretty vastly different. So they can do that once a year, that 100 million option. Now, last year, they did an additional option when they were able to secure some additional pounds from Kazatomprom and then go ahead and get shareholder approval to do another raise, a second raise. I'm forgetting. I think they raised an additional 150 million, if I recall correctly. It was pretty chunky. And so they obviously don't have that option written in contract with Kazatomprom, but if they get shareholder approval and the pounds are there from Kazatomprom, they can buy more than that option allows. So we'll see if they do that again this year, but they, as I mentioned, they're already signaling that they want to do it before their AGM gives them approval. And so I also should mention on this topic that in Q4 of last year, there was the establishment of ANU Energy. This is a new physical fund for uranium that's being established in the East. And this was partially seed funded by Kazatomprom, I think it was 48%, 47.5%. The National Bank of Kazakhstan, another 47.5%, and then a third entity that did that additional 5%. This initial 50 million seed funding is to establish the fund, and they plan to do a follow-on $500 million round this year. And the purpose of this fund, of course, is also to accumulate physical uranium and give investors in the East access to exposure to the physical commodity as well, with a general understanding and theory that there is a strong appetite for investment in energy in something other than oil and gas in the East, and that should be happening as well. So now we have these two physical funds in this physical trust, all financially driven uranium accumulators, let's say. This is a really significant thing. This is one element that really pushed the previous bull market, was the arrival of hedge funds in the space to buy physical uranium and the arrival of UPC, which Sprott took over. So all of that is to say that the modeling done by UXC, the primary uranium nuclear fuel consultant in the space. They essentially serve the utilities and the nuclear fuel buyers and the industry for the most part, but the investing community pays attention as well because they're the ones communicating, the primary communications with nuclear fuel buyers. So UxC's modeling is showing a 200 million pound demand this year, 185 million pound rough primary demand, plus about between 15 and 20 million in inventory restocking, which they're including in that 20 million demand. Now they put 125 million in, 135 million primary production plus secondary supply. So our secondary supply numbers are closer to about 15 million pounds. Their secondary supply numbers include inventory drawdown. So, but either way, they are calculating roughly a 35 to 40 million supply deficit, UxC. We, of course, calculate a far higher deficit because we don't include inventory drawdowns as secondary supply. And also, UxC's numbers does not include the secondary demand coming from the financials. So we have Yellowcake, we have the potential of ANU Energy. If they do a 500 million round of follow-on, that's that's 10 million pounds of uranium potentially. That's huge. That's a lot of uranium to come out of the market into the hands of financial players. And then of course we have Sput. Now our modeling has been very, very conservative. I believe we modeled for about 20 million, 25 million pounds for Sput to purchase this year. I don't have it right off the top of my head, but it's something in that ballpark. Now they've purchased 2.6 million pounds in 2 weeks. They could vastly, vastly outpace the modeling that we are including. We could potentially see up to a 80 to 100 million pound deficit this year alone, largely driven by the financial sector. And of course, I think the timing between now and the NYSE listing, their accumulation will be digging through whatever's going to be available above ground, right? So, and if we get backwardated, if we get a nice jump in spot price, we could see some more pounds shake out of the carry trade. But this is all leading up to the NYSE listing. And what happens between then and the end of the year, all bets are off. So that's where we're seeing the market in the midterm. And of course, in the webinar, we got way more granular in some actual kind of numbers related to that and what we're expecting. But that's kind of where we're at. And that's, the importance of these physical funds, these physical trusts is really have been to accumulate excess above ground inventory and bring the market back into a seller's market. It's been a buyer's market for 10 years, and it's slowly turning to a seller's market. I've discussed a number of other pieces of evidence for why we believe that is happening currently and why that's going to continue to proceed in that direction. All right, I'm very pleased that we had a little dip buying at the end of the day, end of the week. That's very encouraging. It was a rough day for most people in the uranium space. A lot of panic out there. Again, just, zoom out, try not to trade around short-term perceived catalysts. Consider weakness as an opportunity if you're still positioning, and try to take a deep breath. Consider that this is a longer-term investment. Plan to be in this for 2 years, at least on the low side of things. If things go absolutely bonkers, it could maybe be a little bit less, but I do think it's more like a 2 to 3 year investment. And it could have the potential to go even much longer than that. So zoom out, deep breath, keep your eye on the prize in the long term. And again, try to ignore those short-term expectations because they often disappoint, or they come out of nowhere and just rocket to the upside without any reasonable explanation. And that does happen, and it will happen again, typically when sentiment is right about at its lowest. And we're close to being there. There's a lot of impatience in the market right now. A lot of that has to do with the Kazakhstan news coming and going so quickly. That story is still unfolding, by the way. I have more to talk about that, but that's enough for Friday. Hope you all have a great weekend, and I will see you again on Monday. Thanks so much. Cheers.